Yes, I'm back. Like I said earlier, I had problems with trying to set up my live stream, so I had to restart it again and come over here. So the start of our session is almost 6 minutes remaining, so I'm going to use the grace and explain some of my trades that I took maybe in the morning and the London session silver bullet, and we can then focus on the New York silver bullet. So in the morning, like I said, we have to, in my own terms, we have to start looking at the 9:45 a.m. to what to 11 a.m. to be able to spot our areas for possible entries. So um, for the first trade that we have to make in the silver bullet session, we have to look at the 10 a.m. on the London session. So when it was uh, 10 a.m., I spotted the first fair value gap, which is above the 9:55 candle, and I waited for the price to reach to this certain silver bullet fair value gap, which could give us a tendency of okay placing a sell option in the market. Unfortunately, market didn't respond to it. So when the market was broken down on a bearish trend, instantly I spotted the first fair value gap in that kill zone. So basically, if for instance you as a trader happen to start trading a time frame, you have to start looking for possible trades at that 10 a.m. But you can see there's a fair value gap here, which was not respected, which was not respected. So I didn't even look at it. My eyes were all on this bearish candle. So as the price came above here, then I placed my first trade, and I waited for the price for the market to play in its own format. So when the market came, it started going, and we arrived at full to take profit at 1:30 in from my own time zone, that is +1 UTC. So the price came and reached my final take profit. So apart from today, yesterday also I had some trades, but unfortunately, um, unfortunately, I closed out at break even, which is okay. A friend of mine and maybe someone I was guiding and trading also said she missed her trades, and that was not a problem. I told her that a missed trade is a good trade because you sat on your hands. You didn't hesitate to place a trade because the market hasn't given you what you need to see. So for yesterday, my silver bullet session started at 3:45 p.m. That is UTC +1, and I can see on 15, that is on 3:40, the price of this fair value gap was met at 3:40, but unfortunately my own silver bullet start from what from 4 p.m. So the market started going, and there is no any possible silver bullet I could spot from the outside. And this was the start of my session, and this came in, and this was the first fair value gap that I spotted the market and I believe some, if they place their trades, they might have been hit with um, what do they call it? They might have been hit with possible um, loss, and some might be have at break even, because I only target one to two. So when the price of the market has hit my first take profit target, I do not place any trade again. But unfortunately, yesterday I was very impulsive. I was trying to see if the market is going to go in my way, which I predicted. So it does happen. We always break our rules, but it showed me something more to learn, that I should always and always respect my I should always respect my trading plan. So here was the price of the market, and this was the silver bullet that I first started to observe in the silver bullet kill zone at 4:15, that is 1600. We also call it at 4 p.m. At 4 p.m. market came to this level and gave us a fair value gap. So the market started going low, and I believe my take profit, please take profits, because I have to uh, have my risk to reward as 1 to 2. But when the market tapped on my first take profit, that is 10 pips, I instantly moved my break even, my sell stop loss to break even. So, and apart from that, after it moved to break even, I decided, okay, you see where the problem comes for traders, especially people like me. Uh, if it was my other student that I was guiding, I believe followed the she followed the rules I set for her, and I said each day do your homework and send it to me, and she shows me. So she's been doing good lately. So when the market exited this, so I was trying to catch maybe the PM session. It will give me possible fair value gap. So I was looking at this fair value gap over here. I was looking at this fair value gap. I have to document everything. If I made a mistake, I actually accept it that way, because all human beings are not perfect and are not equal. So me breaking my rules taught me one valuable thing, is that no matter what, no matter how impulsive you might be, I also have those impulsive disorder, because I want to do something and something will be pushing me to do it just the way I shouldn't do it, and I end up regretting it later on. So the market came to this level. Then I said, okay, since comes to this level, and maybe this might be premium, and I didn't follow the rules that says when when the silver bullet kill zone is over, do not place another trade. I was saying no. I was going to look for a flexible fair value gap in this PM session. Maybe there's a PM session. I've never traded, to be honest, I've never traded the silver bullet session of the New York session. There's silver bullet kill zone in the PM session, that is afternoon session for the New York session. And us being here on the New York session is actually the morning session of the New York silver kill zone. So I was trying to catch a possible trade from this axis. So when the price came and I placed my trade, and at the end of it I was hit by these two candles, because price didn't respect this fair value gap, and secondly I traded outside my silver bullet kill zone, which I was not supposed to do that. If my price of the market, if I placed or didn't place any trade, once the silver bullet kill zone is over, I should not place the trade. And unfortunately, my trade even hit the first take profit at 10 pips. So I just moved my distance. So I was trying to chase trades just to try and make something out for that day, for yesterday. So that was that on Tuesday. What occurred on Monday, I didn't make a trade. So that was that for what occurred on Tuesday. Today is Thursday, I believe. Wednesday, I believe. Um, uh, I placed my trade on the uh, on the on the on the on the on the London kill zone. That is and that is the morning kill zone, and I left my trade to move the way it's supposed to be. I had to check maybe about when I placed my trade around 10. I had to check it around something around 1 a.m. and before I knew it, price has already respected our analysis and we hit our take profit. So that was that for today, and I cannot place a trade, and all I have to do today is keep reading, maybe to observe. We should observe together and be able to see the possible fair value gap we can spot in this kill zone. I believe I'm ready for that today, and if my trade is going according to what I believe is the direction of where the trend is, then I'm going to set out my take profit parameters. Take profit 1, take profit 2. When it hits take profit 1, I move my stop loss to break even if I am trying to protect my account. So that is that for today. And luckily yesterday I didn't, even with the impulsive order that I encountered. One of the things I did was I didn't over risk my account. I was just risking 0.2, 0.25, and it had to accumulate to loss of 1% for yesterday before I said, I just clicked out. I just went to my MT5, closed the, and I closed the MT5. I closed my MT5 and I continued trading. Sorry, I closed my MT5 and I continued my life activities, and I closed even my trading view. I didn't check anything that was working. So if today we meet up with the possible trade condition, a very good condition, we can place a trade. If we missed or we didn't get one, then we are okay with it. So first of all, we are going to click out our first available area for silver bullet. So, and we have no possible fair value gap, which we have to anticipate from the outside. So we are looking at the inside of the fair value gap section. This is, let me give it, and we are looking at into this silver bullet session. If there is a possible fair value gap, we can spot, which can give us the opportunity to place a trade. We have to wait. That's all we have to do. We have to wait on our hands I know that is one of, like I said, that is one of the hardest thing to do, to wait and look if there's a possible opportunity to place a trade. All you have to do is just wait for that 1 hour, just within that time window. You see the opportunity, you do it, you place your trade. If you don't see anything, you just leave it for the day and wait till the next day before you look for another opportunity. But I believe some of us have still have that impulsive order disorder, which we have to see. We have to just uh, close the trade, close the day with a profit. It should be even higher than what we expect. So I think I'm going to, since I can identify my silver bullet session, so now we are anticipating the when the session is going to be over. That is 5 p.m. from +1 UTC. So um, that is that for now. That is that for now. All to do we have to do now is to wait and look at the possible um, uh, liquidity trade points that the price of the uh, market can go to. So this is a possible one, and there's a second one, but for now let's look at this possible liquidity kill trade point, and below we should have another one. I believe it's very important to sort out your liquidity trade points, which we also ICT also names them and name them as liquidity highs and lows. So this is a clean high that the market can anticipate. This high was broken and it was a very good clean high. So we also have another clean trade liquidity trade point below, which is good. Here also we have a liquidity trade point. This is a high and this is a low. But what is our total um, target? Always and always, like I said, your take profit should also always be, your risk to reward should always be 1 to 2, because that is the best thing you can do for yourself as a trader. If you say you do something like this, like you are doing a trade like this, or you are doing it very tight, you might end up getting hit and the price will reverse back to your take profit. So to avoid that, you should have a minimum and a maximum of 10 points as your risks, and your take profit should be 20 pips, 20 pips, something like this. Every day it should be like this. If in the morning, from the morning session, if I had my trade like this, something like, okay, I spotted my silver bullet fair value gap here, and I decide to say, okay, I want to place a trade here and make my stop loss to be at something like almost, let's say, 50 points. If I'm trading on a futures account, I believe I will not be hit I'll not be hit by the stop loss. The price won't hit my stop loss. But if I'm trading on the brokerage account and also prop firms account, which all are CFDs, I will be successful. I will possibly hit my stop loss. I promise you. This is why I prefer to trade my account like this. It should always be like this. That's the moderate risk to reward you can have for yourself as a trader. You can say, okay, I want to target maybe uh, 1 to 3, 1 to 3, but for me, I always target 1 to 2. This is the best thing that I can do. Even your take profit, let's say there's so much volatility in the market, and maybe you have an area where the stop loss you have to set maybe to 220 pips. So you should know that 20 pips for 40 pips. It should always be like that. Then you can set your take profit as 40 pips. But you should also know that doing this doesn't mean that you should risk maybe for 20 pips you are risking like 2% for 4%. Advisably, what I will say is that as a trader, in this case, you should risk, let's say for instance, there's too much volatility in the market, and sometimes if you place your trade at, there are certain conditions of the market that I see. Some it happens in months, in quarters, in the seasonal quarters, and mostly in the first quarter there's too much volatility. I've always faced this where uh, the market is very aggressive, and for me, I usually trade terribly in the first quarter of each year. That is mostly from February, March, and most especially February. So there's too much aggressive price movement in the market. And so in that case, if you see the area where you have to place your stop loss to be at 20 pips, so your take profit should be something at 40 pips. If I had a premium plan, I could have shown you something. If I've gone back to February, I'll show you something similar like that, because earlier I did some research and I saw it. And I did some AI analysis research, and I saw it most especially in that first quarter of the year. There's too much volatility in the market. So what I'm going to say here, that if maybe you are risking 20% and 20 pips, then your take profit should be 40 pips. But you should break down. If for instance you are trading on a $10,000 account, I believe if your lot size is, if you are risking 1% for each trade, and you have to place maybe let's say 1.0 for each trade. So if in the case that you have to risk your you have to have your risk to reward at 20 pips, then you should have your lot size should be at 0.5 if you are trading on the currencies, that is on a $10,000 account, which equates to 20 pips on a 0.5 lot size is $100 you are risking, and your take profit 40 pips will be $200. That is 1 to 2. Why I say that is that if you encounter a month where there's too much volatility, and in that case you might experience too much losses in that month. Why? Because maybe your normal risk to reward is too tight, which is your stop loss are very tight. In that case you might be successful, you might end up having the market always topping out and going to a top profit. So when there's too much volatile market condition, you should always expand your stop loss. You should always expand your stop loss and reduce your lot size so that the market condition might favor you in that month. But you should always have this thing, research, because a very volatile market, some people cannot trade it, especially me. I cannot trade a very volatile market condition. The market has to be stable for me to be able to trade. I hope you get that. So we are still looking at the market. We still have 40 minutes remaining, and we are waiting to see a first possible fair value gap. I'm still waiting. Let me sit down and watch and see what can we anticipate. But for now, I have to wait. If I see a possible opportunity, then we can head back to talk, and we can also look at some pairs. Beautiful. You can see for this, yeah, didn't meet up with this fair value gap. Let's look at the next pair. Interesting. This is going inversely. You can see on the one session from 9:45 and at 10 a.m. Let's meet up with this fair value gap. This second fair value gap and price came at 11 a.m. directly at that first, at the final trade condition for the silver bullet. Some might have placed that trade right at the close and waited for the market to keep going. So we are going to go to our silver. Silver, we have a possible fair value gap here. We have a possible fair value gap. So whoever is trading it might have to wait for it to be respected. Let's see. Yeah, so the market even respected the silver bullet fair value gap because this next this was the first trade condition, and this candle that gave the condition of this fair value gap being respected. So this is the first value gap, and this is the first candle, second candle, third candle. The fourth candle has respected this fair value gap. So I believe some can place their trade and target the next high of liquidity. If you are trading maybe the silver, you can put your stop loss to 50 pips and your take profit to 10 pips, which is 1 to 2 risk reward. There are conditions of it depends on the currency pair that they are trading, which I didn't explain earlier. So there are trade conditions where if you are trading a specific type of pair. You understand? So, and advisably, I could tell you something is that if you are confused about how I explained about the 1 to 2 on the risk to reward, because I'm using this take profit tool, um, what you will do as an individual who is a understanding trader is that okay, you can place according to your um, margin and also leverage that the company has given you, that is the broker or the prop firm. So what you are going to do is always risk 1% for that 2%, or maybe you can risk 0.5% for 1%. You see, that is 1 to 2 risk to reward ratio. So I believe some people might have placed a trade right below here, and they can target this trade point. So you can look back from the previous um, trade conditions, and you can see there's no uh, place to target as your area for for market to break. So all you have to do now is just watch if you have placed a trade. Me, I'm not placing a trade because I have already placed mine in the morning. So still, it is still in this fair value gap session of the silver bullets. So it's respected it again, and if it is going to close below the silver bullets fair value gap, we can say this fair value gap is invalid. But if the market keeps going, we can say yes, it has respected this silver bullet fair value gap. So we are going, this is the silver, and for me I'm going back to uh, SP 500, SP 500, which I have made my focus on. And interesting to say, we have not seen a possible I'll filter this out. So we're going back. I've already shown what needs to be done here, and it has occurred. So for me, I'm not reading this pair, but I've shown my own opinion. I've shared my own opinion. Firstly, even if this trade didn't go according to your analysis, at least you've respected your trade rules, because you've respected why did I say that is because you've traded in the silver bullet kill zone. Secondly, the moment you spotted the first fair value gap, you placed your trade and you leave the trade to work on its own. And if the trade works or it doesn't, you go to the next trade. That is how I give my opinion on how to see if this trading strategy works for you or doesn't. Place the 10 trade conditions. Each day you should trade once. Each day you should trade once. So out of that 10 trading days or maybe 20 trading days, you can know that if that strategy works or it doesn't. I should always have a journal. You can even download an app as a trading journal on the App Store or Play Store. Trading journals idea, and I believe they are free ones. I can't mention some because you have to do it research on yourself and see it. So we are going back to my We are going back to this. Let's look at to the 3-minute time frame too. Okay, on the 3-minute time frame, you can see a possible fair value gap. Fair value gap was respected, which in that case, I can identify it as a clean fair value gap. So if you are a trader, you can place your trade, and tomorrow we can, when I'm back, I can speak on the what we have had as a trade result, if this was a possible good trigger for us to place a trade. All I know is that once the silver bullet session is over, I do not place any other trade. That is the trade condition that I should have. Interesting. Market is coming to this area. We still have our stop loss to this level. And we will watch what the market will do. I will have to set the take profit parameters, which is at 10 points. Once the market um, reaches the take profit, the stock profit, I believe, and you as a trader should actually move your stop loss to break even advisably as the market hits the first take profit. Then you can put your stop, that is your first take profit at 10 points. You still have a lot of time for the market to be the silver bullet kill zone to be over, and I will be exiting the trade session. I can move also to other pairs like the silver, which we spoke about. Same thing, we can see the silver bullet session and trade entry, and you can still have your first take profit at 50 pips, at 5 pips, and also your take profit at 10 pips. That is that for silver. And let's go to SP 500 index. We are still looking at this take profit to be reached before we can place a trade. We can place our stop loss to break even. We have still 19 minutes remaining for the silver bullet session to be over. I apologize for because we have to wait until the silver bullet session is over before we can decide to end the live stream. And I believe if we have a tendency of the market to tap into our first take profit, I believe also we can close the trading session for today, and you can still keep an eye on your trading view to look at the market, or go and continue other activities as well, and wait for the next take profit to be hit, which in that case advisably I will give you an in my own opinion, and you should set your alert, trading alert, at the second take profit, so that when it hits you can be able to see it. So for first take profit, you are looking at it. Once the take profit for the first target is hit, I believe you can go and do your activities and check back in the trading view after every 30 minutes or 1 hour, which is, I think it is better for you as a trader. That's it for today. So we are watching. This is the high that we are looking at the price possibly to break, and which is our target. we can still see on the 5 minute time frame we have some possible fair value gap, which the session is yet over, but we can see some fair value gap. If maybe you have missed the first one we saw on the 3 minute time frame here, you can look at the next fair value gap and that session, and you can anticipate it. This is another fair value gap. I apologize, move this by the side. This is also a possible fair value gap, and which is, if you have been watching on you have been looking at the 5 minute time frame, this is a fair value gap, which the silver bullet session is not over. We just have 8 more minutes and you can see your first possible fair value gap. And for we who have already seen the first fair value gap here, we anticipated it on the 3 minute time frame. Here, as you can see, and here is another. This is for the traders who have maybe seen the fair value gap only at this current moment. You can place your trade move like this. Your next possible liquidity is this high. Here you have it. And now next possible liquidity run to be hit, and for here you can set your take profit at 10 pips here, and your total take profit to be at 20 pips. Once it hits 10 points, then you can move your stop loss to break even and let the trade ride and be risk free. And I'm going to delete this because we have been focusing on the 3 minute time frame for today. So I'm going to change this, and we are going to look We've come to the final session of the silver bullet, and I believe we can continue uh, monitoring the trade once it is each after 30 minutes. That is, every 30 minutes you can check in your trade and see where the price is still moving to. For me, this is it, and today I didn't place any trade on the New York session, but I did place a trade on the morning session, which I showed you guys. Thank you, and I wish you good luck in your trading. Have a nice day.